Let's bring in Axel Merk to talk U.S. dollar and really try to put together all that we've seen this week. Axel, good noon to you.
Hi, good morning or good afternoon.
What are your fund investors doing with their fund money? Are they selling in panic, or are they going in there looking for a weaker dollar?
We've had significant inflows in the last couple of days, and we obviously have a heavy euro exposure. But when we buy the euro, we don't buy Southern European securities. We buy German T-bills, Finnish T-bills, Northern European debt. And ultimately, we believe that the euro can thrive in this environment, and all this theater should be playing out mostly in the spreads in the bond market. And we've seen the euro rally from 118 to the 140s on the backdrop of this. And a year ago, people said the euro is falling apart, going to parity, yet it is much stronger. And it is because the place to play these things out is the spreads in the bond market.
Within the spreads in the bond market, you sent me a wonderful note on money market funds. Bring up dreaded first chart, if you would. Here's the backstory. We showed this yesterday. July brings quantitative unease. Okay, there's the Fed's balance sheet. Let's call that the chart that speaks volumes. You take it, Axel, from assets, subprime, 10-year purchases, right down to our money market funds in the United States. How do you do that?
Well, sure. I mean, people who are concerned about the contagion in the Eurozone, I don't think they're too concerned about German T-bills, but investors may want to look in their own money market fund. If you don't have a tax-exempt fund, odds are those money market funds have been chasing yields just like everybody else to make ends meet. And the way to do that is to buy commercial paper issued by European banks in US dollar. One of the largest US money market funds has over 50% exposure to European commercial paper, including 5% to BNP Paribas. Another money market fund, a retail one that we looked at, had 72% European bank exposure. I don't think most investors are aware of that when they hold a money market fund, they have much more contagion fear than when they hold the euro, in our view anyway. Obviously, you have the currency risk by holding the euro directly, but you do not have the commercial paper risk when you hold German T-bills.
Full disclosure here, folks, I circle words that scare me, like hope, fair, dangerous words that get you in trouble. Axel, I heard one of them today, voluntary. We're going to have, Sarkozy says, the president of the Republic of France says we're going to have voluntary action by bondholders. What does that word voluntary mean to you?
Well, what it means, practically speaking, is that the Greek debt is fairly concentrated in a couple of banking institutions. And those banking institutions don't want to mark down their holdings, and so they'll go along with any plan, as long as the auditors also go along, to roll that debt, or not to extend the maturity on a quote-unquote voluntary basis if they don't have to mark down that debt. Everybody is spooked about that. Having said that, the market is clearly pricing in that debt isn't worth all that much, and so it would be very healthy for people to actually bite the bullet, because the market is going to force that sooner or later anyway. Right now, with the latest development in Greece, it appears that it's going to happen later, but at some point, of course, it's going to happen.
Let's look at the Merk Investments currency fund. Here's a long-term chart. It's a long-term view, synthetic euro. It's Deutschmark inverted. We're trying to be math-free here on Friday. Deutschmark inverted plus a euro, and you can see we're above that long-term, and I mean long-term, 50-year, make it 40-year trend line. Axel Merk, why won't the dollar strengthen? Why is there going to be dollar weakness? Is it asymmetric, or is it symmetric, strong euro, weak dollar? Which are you most focused on?
It's because the Federal Reserve, in both word and action, is pursuing a weak dollar policy. In the Eurozone, you have these problems precisely because less money is being spent and printed. Bernanke has said going off the gold standard during the Great Depression has helped the U.S. recover from the Great Depression faster. Somebody is of the other trade of this, and that is the Eurozone. Weak economic growth, yet a strong currency. You don't need to have economic growth to have a strong currency. You mentioned the yen in the introduction. Look at that. Lousy economic growth for 20 years and a strong currency. In the U.S., you need it because of the trade and current account deficit. You don't need it in Japan. You don't need as much of it in the Eurozone.
Here's a research note, Axel Merk. We should expect more easy money. There it is, research note. We should expect more easy money. James Dimon is correct that headwinds caused by upcoming regulations as well as those introduced since the crisis are enormous. You're really pushing against a lot of consensus here, Axel, saying Mr. Dimon's a bit off the mark. Yeah, I do that all the time, Axel. It's okay to do that. They're in my, they're like, fix your earplug, Tom. It's a Keynesian earplug, Axel. That's okay.
Exactly.
Anyways, what's Mr. Diamond got right here?
Well, what's got right is that we have tremendous headwinds. We are not only fighting market forces because consumers are underwater and the Fed is trying to prop against that, but now in the banking sector, we've had all this deleveraging happening. And Jamie Dimon pointed out now 300 additional news and regulations are imposed on the banking system. Nobody has done a cost-benefit analysis. The CEOs in the banking sector, with the exception of Jamie Dimon, are all scared about the so-called backlash. But having a rational debate is absolutely necessary. And what's happening is that we just need to print ever more money to fight those market forces. We're not getting the fiscal stimulus the Bernanke is hoping for. And so as a result, it's all going to be on the Fed, and the Fed is going to keep easy money while increasing regulations and contributing to the headwinds caused in the U.S. And that's, of course, not a good news for the U.S. dollar.
All right. Axel Merk, there was a card-carrying example of talking about the big fuzzy picture and not talking about the specifics of banks' balance sheets, whether it's BNP Paribas in France or it's Bank of America in the United States. Do you have faith in their balance sheets?
Well, that's, of course, one of the major challenges in global banking, that there's no mark-to-market accounting, and that's why we have all these issues, and there's this dance around about voluntary rollovers and whatnot. Ultimately, of course, the market is looking through that, and it is discounting for it. And at one point, though, I do very much agree on, if there's one thing that's worse than bad regulation, it's uncertainty about regulation. We need to have clarity. We need to have clarity in Greece, and we'll get more over the weekend. We'll need clarity on many of the regulations in the U.S. That is something that's keeping the economy back, and that's something that's keeping back and cleaning up a lot of the mess that we have in the world.
Yes, Axel, Thomas Honig today in the Financial Times talked about UBS not coming to the United States. We've got it up here, Bloomberg View, folks, but this was in the Financial Times. Why the sign must say no UBS in the United States? Honig, a foreign bank could base its investment bank in the U.S. Why would they not expand into commercial banking to gain full access to the safety of our deposit insurance and the Fed discount window? This from the Federal Reserve Bank's head of Kansas City. I would suggest Honig saying we don't have the Bank of America's in order. Why should we let the foreign banks in? Your thoughts, please.
Well, first of all, from a Swiss point of view, the Swiss National Bank has been, I believe, the most aggressive one in bailing out its banking system. When, in our view, we don't have proof for that, but in our view, when the Swiss National Bank bought euros to intervene, remember that happened for an extended period.
It took a big loss.
The primary method, sure, and to continue to keep losses, but the primary way of doing that is to buy the toxic securities of the Swiss banks. And Hildebrand, the head of the Swiss National Bank, has said as much, and saying that they, the national bank, took on all the burden that otherwise the national government would have done. And so a UBS, of course, they're happy being in Switzerland, because if they have a problem, the Swiss National Bank can help them out. And the more internationally intertwined, the more complex it gets. But make no mistake about it, if we have a fallout from Greece, and that swaps over to U.S. money markets, the Federal Reserve will be there to the rescue. Of course, we'll have hearings afterwards in which Fed officials will be grilled, but the Fed will help the money market system. And the advantage of being in a U.S. money market fund is you're part of a too-big-to-fail system. Of course, if you want to be part of that, you want to be as domestic as possible here.
Axel, Tom Brown said on this show 10 days ago, the only reason he owns Bank of America is it's dirt cheap. It's at $10.64. What does Mr. Moynihan need from the U.S. government to clear his balance sheet and to make for finally a healthy banking system?
Oh boy, I'm probably the wrong person to ask on that. I still have Ken Lewis in the back of my head. There are great banks out there, without endorsing them, that get all the brunt because they're so big. Bank of America has a lot of issues on its plate, and I'm glad they're tackling them. But I don't want to get into the politics of the details there.
Well, that would be very good. Axel Merk, thank you so much. Greatly appreciate you coming on, and particularly your comments on the Bank of America.